It's super clear to me, to be honest with you. I don't see the biggest problem as a issue with the financial system. The issue is that most people don't understand it, right? And if I look sort of like cross sector at my network, my community throughout Canada, north or south, the border down in the States, I would point to the majority of expressions of civil unrest that we've seen since, the last 15 years at least, due to a lack of understanding about how money works.
Okay, so we are here now for the how to fix the financial system. I'm going to bring our panelists up here in a minute. My name is Bronson Hill, Bronson Equity. We're a multifamily investment group. We also do some alternative assets. I'm going to go ahead and bring our panelists up that are backstage, and we're going to go ahead and welcome them. But go ahead and stick in the chat if you are able, where you're coming from. All right, so welcome. So this is how to fix the financial system. So we're going to talk about two major things today. I'm going to introduce our guests. We're going to jump right into it. All sorts of stuff happening right now in the market. Lots of fear, lots of challenges. So if you were not able to fix it, what would you do to prepare? So I'll go ahead and do a quick intro of our panelists. And so coming from Cambridge House, we have Jay Martin, all the way from Canada. Welcome, Jay. Good to have you today. Awesome. We've got Russell Gray joining us. So welcome from the real estate guys.
Thank you.
And we've got Brien Lundin from the Jefferson Companies and the New Orleans Investment Conference, which is coming up here. Really excited about that. A couple quick announcements as we get started here on how to fix the financial system. The New Orleans Investment Conference is coming up next week. I will be there. I know Russ will be there as well. And Brien, of course, hosts that conference. Awesome conference about metals. Brian's going to share about that a little bit later. Jay also has his conference about metals in Vancouver coming up in January. So you want to check both those out. So we'll try to get some links in the chat coming up here. So let's just set the table here. Let's talk about it. If you did have a magic wand and you were able to look at the problems, in the financial system, let's just start with that actually first as a diagnostic tool. What's the biggest challenge that you see? And I know there are many, but what's maybe one large challenge that you see in the financial system? Let's start with Jay, and we'll just kind of work our way around here.
Yeah, thanks, Bronson, and thank you for having me on today. It's super clear to me, to be honest with you. I don't see the biggest problem as a issue with the financial system. The issue is that most people don't understand it, right? And if I look sort of like cross sector at my network, my community throughout Canada, north or south, the border down in the States, I would point to the majority of expressions of civil unrest that we've seen since the last 15 years at least, due to a lack of understanding about how money works, right? And it's kind of crazy that we go through 13 years of education and never touch on issues like credit, interest rates, capital gains, leverage. And as a consequence, you graduate from this system, you jump into life. Only a small percentage of people know how the world operates. And then we all wake up at 30, and a lot of people wake up at 30 and they look at the Monopoly board and they're like, how did those few people get so far ahead of me? They must have cheated. So this can't be fair, right? And we get into this cycle. And, I got 3 young kids, so I think about this a lot, right? And I think that there's a lot of issues with our financial system. Yes, there's manipulation. Yes, there's corruption. Yes, there's a lack of transparency and accountability. But I don't think those are financial system flaws. I think those are human flaws. And I think as long as we're running this, those things are coming too, right? And I'm not sure if there's any. Can it be improved? Yes, definitely. Is there a system where we lack those issues? I don't think so, right? And so, in any expression of like a true free market, there's still going to be manipulation because there's going to be a subset of humans that are just a little bit smarter and a little bit more competitive than the rest of us, or the rest of some people. And they will manipulate a subset of the population to their own gain. And that's competition. And that's, call it whatever you want, but it's also advantageous. It's a positive attribute of human nature that we're very competitive as a species. And so when I look at the financial system, the problem is, from my standpoint, is that people generally are not educated about it, right? And when you don't understand something, it's mysterious, it's intimidating, you hesitate to approach it, right? And as a consequence, the majority of people, I think, have a lot of misunderstandings about, why things work out the way they do, right? Does that make sense?
Yeah. So the human element, obviously there's a plus side and a minus side. Really, financial education can really help empower people, which is, I know, really what we're all dedicated to, right? Is helping people to understand more about the financial system. That's great. Brien, talk to us a little bit. What's the biggest problem or challenge that you see in the financial system today?
Well, I think we have to recognize that where we are today is in the end game of a trend or a cycle that began, you could say, even back in the 1960s, when we just started embarking on deficit spending through guns and butter, et cetera. Or you could say 1971, when Nixon severed the link between the dollar and gold. Or you could say 1980s, early 1980s, when Volcker had vanquished inflation and was actually on the process of lowering interest rates. What began at that point was that in response to every little slowdown or potential slowdown in the economy, every little hiccup in the markets, the Federal Reserve came in with the same prescription. They lowered rates, and they lowered them and lowered them and lowered them until we finally got down to zero in 2008. And then they had to do more. They had to come up with quantitative easing, blatant money printing, debt monetization, bunch of acronyms and programs, et cetera, but ever easier money. And then post-COVID, everything they did, 2008, they did to a much greater degree in a much shorter period of time. So we are in the end game of this process. And through that process, the Fed has continually blown up bubbles that then burst, and then they had to come in and rescue, et cetera, et cetera. But that process encouraged along the way the buildup of ever greater amounts of debt. Ever lower interest rates encourage ever greater debt burdens, particularly federally, to the point now where we're in a trick bag. The Federal Reserve is essentially trapped. If anybody asked me what advice I would give Jay Powell right now, I would say run. Just run for the hills, buy a bunch of gold and silver, go hide out in a cabin in the woods, because it's not going to be pretty and you're going to be blamed. And might as well just go incognito. They don't have anything they can do. With a debt burden like this, they can't fight inflation, and it's going to absolutely crush everything. So, I'm a pretty optimistic person normally, but I don't really see a way out of this with a lot of turmoil and trouble, and eventually a reset of the whole financial system.
Yeah, awesome. Thanks for your thoughts on that. Russell, why don't you share, you're really good at just kind of explaining what you see happening in the world. Why don't you give us a little bit of insight as far as what you see some of the bigger challenges in the financial system being?
Okay, but I want my shot at answering this question.
Okay, have a shot.
All right. So I think that the fundamental flaw is the system itself. It's fundamentally flawed. It's broken. And there's a question in the Q&A from Ryan, and I think it's a great question. So I want to hit it now, because I think there's a book called Made to Stick. And in that, it talks about the curse of knowledge. And when you get a bunch of people together talking about something they know a lot about, their basis for the beginning of the conversation is above the heads of a lot of the audience. I know that used to happen to me a lot when I would go to financial conferences. So let me just answer the question. What are the basic components or major components or purposes of the financial system? I would say there's three. There's the currency, or the money, and they're not the same today. That's one of the problems. The other one is the banking system, which is where you aggregate capital, savers and borrowers come together, and that's kind of a market-making place. And then the bond markets. And so in 2008, we saw the bond markets implode. We've been watching since 1913 the dollar implode, which is why I'm a big fan of gold. And the banking system is fundamentally flawed because of their model, which is fractional reserve banking, and they lend short and they borrow short and lend long. In other words, you put your money into the bank on a deposit, a demand deposit. You can put your money in the morning and demand it out that afternoon. But what they do is they turn around and leverage it to make long-term loans, car loans, credit card loans, bank loans, home loans. And so the system itself is fundamentally flawed, and it was taken over and shifted from being based on sound money and sound money principles in 1913, when the Federal Reserve was born in the 16th Amendment. That's where we got the IRS. We didn't have income tax before then. That's where we got the Federal Reserve System. And that's where we got the IRS, right? None of that stuff existed until 1913. And if you go look at a chart of what's happened to the purchasing power of the US dollar since then, it's basically been down, and we're at the end game, to Brian's point. Brian, there's been several resets along the way. Were you at the summit the first summit we did when I dressed up as Graybeard? Bronson, were you there for
I
that
was
one?
there. I had
Okay.
trouble. It was a little distracting. You were dressed so well in this big beard and you gave a great presentation.
Yeah, so we do our investor summit down there in Belize, and we thought we'd go with the Caribbean theme, so I put on a pirate outfit. But what I was doing was showing how the entire financial system had been pirated, and I went through step by step the various resets. And obviously the Federal Reserve was a big reset. Brian mentioned Paul Volcker. Paul Volcker was the chairman of the Federal Reserve, who had taken over in the middle of the inflation or the stagflation that was in the wake of Nixon taking us off the gold standard. So when Nixon broke the gold standard, the US dollar collapsed, oil tripled, prices went up. Nixon imposed wage price controls trying to stop it. Now the UN is currently asking the central banks and the nations to embark upon some type of a capital control or a wage price control to try to contain inflation. So people think, oh, how could that ever happen? But that happened back then. So, but that big reset, when he took interest rates up to 20%, began the beginning of a giant bond bubble. We're on the back end of that bond bubble right now, and it's bursting. And Brian put me on a panel with Jim Rickards and Daniel DiMartino Booth. I was in way over my head, but Adam Taggart asked me a question, and I just said, look, the biggest threat I see right now, and this is where I think it comes down to Main Street, is that is the bond market. Because when you raise interest rates, bond values drop. It's just like cap rates on apartments. If you have real estate people out there, they understand that. And so when those bond values drop, and they've been leveraged, which they have been, this is what the Bank of England just had to bail on their pension, to bail out the pension accounts. When they have to, when those bond values go up, and interest rates go up and bond values drop, you get margin calls, which creates a big bid on the dollar. We got the dollar at a 20-year high because people need dollars to meet these margin calls. And I asked Danielle last year at the summit, you were there. I said, is the Fed going to keep raising interest rates till something breaks? And she said, yes. I said, then what's going to break? And she said, the credit markets. It's exactly what happened in 2008. And everything that was wrong in 2008 is wrong worse right now. The only thing they fixed is it's not going to come in the subprime market. It's going to come from someplace else. And I think it could come from treasuries, might be corporate bonds, but right now, look at the Bank of England. Again, I go back to that. So I'll shut up right now, but I think the biggest problem is fundamentally flawed. The currency's doomed. The credit markets are doomed. Now, it doesn't mean that we're doomed. It just means there's going to be a lot of change and a lot of chaos. And inside that, for people who are aware and prepared, a lot of opportunities. So I don't want to be a doom and gloomer, but you got to deal with what the reality is. And I know we're going to be having a lot of great conversations in New Orleans, and I'd love to get up to Jay. I've had Jay's conference on my list for probably years, and I've never gotten up there, and I really, really want to go. But you're going to get a lot of smart people talking about that. But the bond markets right now, I think, are the number one problem now.
So you bring up a lot of great points, and I think it's interesting that we're all into precious metals, we're all into gold, real assets, different types of things like this, and yet we're all, we have a lot of concerns about the financial system, probably why we're looking into these other things. Now, someone who's maybe not as familiar with this, I always tell people, there's people that are doom and gloomers, and there are people that think that life is going to continue as normal, and I'm kind of between those two. So I try to see both sides and then kind of make up my own decision along the way. Let's kind of shift into that a little bit. What are some things you think, we'll start with Jay, but what are some things you think people should do to educate themselves to learn more about this? If I'm new and I'm like, I'm seeing what's going on, I'm seeing interest rates rise. A lot of people I've noticed, at least on the multifamily side, have put a pause on what do I do with my money? I don't know if I should put it in deals, but I'm losing to inflation, and yet gold and silver are going down because the dollar is getting stronger. And so there's just a lot of confusion. So what are some kind of personal choices people have right now to either educate themselves or to invest in? Maybe just some options there.
Yeah, a couple of things come to mind. You hit on one. You said there's like a doom and gloom camp over here and a, perpetual bull camp over here, right? And it's a trap, right? And there's a large business around selling financial commentary, and investors need to be super wary of that. And, when someone's pitching you a crash thesis, it typically sounds like they're trying to help you, right? Things are going to get really bad, but here's what I can do to save you, right? Whereas when someone's pitching, a bull market outcome, it sounds like they're trying to sell you something, right? So people tend to gravitate towards getting help rather than being sold. And so the doom and gloom camp always wins in terms of mass and volume. Plus, fear narratives just sell really well. But I'm with you. Things are never as bad as we forecast them to be typically. And, Russell said it, the system might be doomed, but we're not doomed. And I completely agree with that. We're going to go through a massive transformation and things might get pretty sticky. Like I'm not, my business right now is purposely built super, super lean and agile. My portfolio is incredibly barbelled. I'm hyper conservative, primitive hard assets, metal and land. And over here, I'm highly, highly speculative and I got nothing in the middle. I like the super high risk and the super, super boring. I'll bet all day long on human ingenuity and we'll get through this into some new version all day long. I'm an optimist eventually, right? There's just going to be some pain in any sort of growth period or transition period. What can people do? I think it's like really important. So I'm a retail investor. My audience is just like me. They're retail investors and they tune in as we go through having conversations with people who have made more money in the sector than I have. And I'm just there to steal their best ideas. But, what I would tell you that I've learned as a student in this sector myself through my podcast is that, the perpetually successful investors that have survived market cycle after market cycle, they all have very specific rules. And creating them is the easy part. Following them, that's way harder, right? When you get caught up in the emotion of, a rising or a falling share price. So, maybe rule number one is stay alive, right? And that's hyper important because it's really easy to get excited about a new idea, hear consensus from your network or whatever gurus you're following and get way overconfident, right? And people often get burned out. They get into a FOMO trade and they get wiped out more than they can afford, right? And so advice, I would say work on the boring box first, right? And once you've got that boring box ticked, right? The gold, the silver, the land, I put cash in that box. You can question that, but I like having dry powder available to me. If it's in US dollars, that's where it's parked right now. But until that is incredibly robust in the sense that I know me and my family are good in that crisis scenario, then I can go gambling. And I like to gamble and, I invest in startups and early stage mining companies, right? I'm in the spec and the venture sector. And so, determine what kind of investor you are is number one. And the way you get there is to determine how much time you have to invest in being an investor, right? We saw this surge of day traders and swing traders over the last 2 years. And most people don't actually have, first of all, that's a tough game to win at, very, very tough. And the very few people that actually beat the market cycle after cycle are so rare that they're household names, right? That's just a fact, right? There's not very many Michael Jordans or Ray Dalios, but we know who they are. And so determine how much time you have to invest in being an investor consistently, not this week or this month, but over the course, because it's going to take years to compound results. And if you have 3 hours a week, don't try to be a day trader. Don't try to be a swing trader, right? Figure that out, right? I have about 2.5 to 3 hours per day. That's my market time. My business and my family eat up the rest. That's perfect for a value investor, right? But I would never try to day trade, right? But it's perfect for me to look at select opportunities, due diligence, feel good about where I'm at, check in on those opportunities, visit the portfolio. But it's rule number one is, and if you don't know what kind of investor you are yet, if you can't answer that question, figure that out first. That's step one.
We had George Gammon and Mark Moss on here a few months ago, and they both kind of said the same thing. They were saying, find out where you have an edge and really lean into that. So whether it's your business or it's where you're educated, where you have an edge against the market or something else. And so we have real estate. Obviously, all of you guys are in metals, and Russ, of course, is also real estate and other assets as well. Brien, talk to us a bit. Obviously, you're a metals guy. You have the gold newsletter. Talk to us, what are some things people can do to educate themselves and prepare themselves for what's to come?
Well, if they're listening to this, they're already there, basically. They go listen to webinars like this, listen to the alternative media out there, go to conferences. It's going to take some time, money, skull sweat. I couldn't agree more with what you and Jay were just saying. Find your edge. In the metals and mining sector, I tell people that it's a very inefficient little market and you can outwork the majority of the other people and gain an edge. But it takes dedicating yourself time, money, and skull sweat and working at it. And that means going to the conferences. It means subscribing to the best newsletters out there and learning about it. Because frankly, none of this stuff we see going on out there right now is normal. Ain't none of it normal, believe me. This is not anything our parents saw. You know, my parents saw World War II. They saw a lot of crazy stuff, but they never saw anything like this in terms of the economy where, you know, zero or negative interest rates are normal. That, you know, before 2008, if you would have gone on CNBC and said half of what's going on now today and predicted it accurately, back then they would have carted you off the set in a straitjacket. I mean, that was tinfoil hat stuff. And now it's accepted. If you go on CNBC, if you go on the nightly news, they're talking about all this straight faces like it's situation normal. So yeah, we are in you know, a strange period, and it doesn't mean the end of the world, because there are ways you can protect yourself. There are ways that you can profit from this macro picture. And nobody, another thing is, as people are educating themselves, nobody has all of the right answers. Anybody that speaks with absolute assurance as to precisely what's going to happen in the future is probably lying to you about something else as well, because nobody can predict it. There's just too many variables. But we can be fairly confident that, you know, you want to be in real assets or income producing assets in real estate, gold, silver, that sort of a thing. Maybe not 100%, but you need to have that portfolio, that section of your portfolio properly allocated. And then, you know, you can maybe not relax and see what happens, but be a lot more secure and confident than a lot of other people will be.
Yeah, you brought up a good point. You know, things that have happened now or the last few years, just if you'd said 5-10 years ago, they would have laughed you off, you know, whatever stage you were on. But now these things are happening, and we just wonder kind of, you know, what's next. So a lot of people are really wondering. So Russell, what do you do a lot of work with people and really trying to educate your audience on preparing. What can you give us kind of step one, step two things that you would recommend, maybe that haven't been mentioned, or even reiterate kind of what you would suggest?
Well, there's two parts to it. I mean, this webinar is about how to fix the financial system. And of course, none of us can. You know, last time I looked, the Congress, the legislature, the bureaucrats, Jerome Powell, none of them are calling us, asking us our opinion. So really what we have to do is fix our own financial system. So we have to understand the way their system works and then just mitigate those risks. So the question was about education. I think that we pretty much covered that. You know, you're watching things like this, you're already in the top whatever percent there is. If you attend conferences, I would really encourage you to start your own mastermind, get together with people. You know, I spent a lot of time, we put together events. You know, our summit is a big mastermind. It wasn't enough, so we attend religiously the New Orleans Investment Conference. That's kind of Brian's mastermind. I have a whole bunch of really, really smart people now through the show that I've been able to build relationships with, that I can kind of call and talk to anytime, ask questions. If I don't understand the repo market, I call George Gammon. If I'm trying to figure out what's going on, and you know, the whole healthcare thing right now lately, Chris Martinson's really taken that on. I mean, the list goes on and on. So find a way to upgrade your network of people that you're listening to, and people that are following it and studying it and really paying attention. Other than that, I would really focus on trying to understand the mechanics of the way the system works. I've spent a lot of time. I got wiped out in 2008 because I did not understand the mechanics of what was going on. And so the mortgage-backed securities market was triggering an absolute train wreck, and some smart people saw it and were sounding the alarm, but I couldn't even understand what they were saying. When I went back and looked at the newspaper headlines, all the warning signs were there. I just didn't know what I was looking at. I'm sure many of the people watching this probably saw, you know, if they're watching the financial news, that thing I mentioned about the Bank of England or what's going on with Credit Suisse right now, but it just goes right over your head because you don't understand what it means. You don't understand what interest rates rising at the fastest rate ever since, you know, whenever it was, mortgage rates, you know, what that really means. But if you understand basic things like the inverse relationship between bond values and interest rates, and you know, and you understand margin and leverage, then you can see a financial crisis brewing, and then you just begin to look for smoke. So I would say study the news. Don't just read it, but really pick an article and study it, get together with people and study it and try to understand what they're saying. You may or may not agree, but you may think it doesn't apply to you, but anything going on in the macro, all that crap literally rolls downhill and lands on Main Street, and it will land on you. It did in 2008, and it will again. Again, not to be doom and gloom, but you just got to be aware, right? And so specifically when you look at the things you want to look at, and I think in your portfolio to be concerned about, first of all, you have to understand the risks. So if the dollar is part of the financial system, and it is, then you have to understand the risks to the dollar. And do you have a plan B? Most Americans don't think outside the dollar. I'm a big fan of precious metals because it's an alternative to storing wealth. Instead of having savings, you hold metals and you can pivot into any currency, including the dollar, if you want to. It's just an alternative way to hold savings and equity on your balance sheet. So that is a way to hedge yourself against a currency problem. Banks, there's a question in the chat about life insurance companies and whole life insurance and these, paid up annuities. That's an alternative to keeping liquidity in the bank. So now you're backed up by the life insurance balance sheets, not the bank's balance sheet. So if you're over $250,000, you may think about that. So gold and cash value life insurance can be a couple of places you can store liquid wealth, one denominated in dollars, one lets you to pivot in either direction. It's not an either or, it's these tools you can have in your toolbox. I think you need to understand the credit markets can be fragile. And when credit markets collapse, it's not forever. They get rebuilt. But during the period of time that they break, the things that are dependent upon healthy credit markets drop in value precipitously, and real estate's right up at the top of the list. Well, if you know that that could be a possibility and you're liquid, it's shopping time. If you're wrong-footed, then you're on the wrong end of the deal. You're the one being foreclosed on. You're the one selling in distress. But if you're on the right end of the deal, you're the person in the market putting in the bottom and actually saving the market. So you just have to be aware when there's tremors in the credit markets. You look back and when the 2008 crisis was forming, there was Ford Motor Company and GM. Both big companies, both with chief financial officers. The Ford CFO said, hey, I see trouble brewing. I'm going to take this $1 billion credit line we have and I'm going to draw it so it's liquid. Well, sure enough, credit markets imploded and guess what they had? Cash. Now, had the government not come in and bailed out GM, Ford would have really been able to pick up market share and talent. So the government picked winners and losers. You can agree or disagree if they did the right thing. But at the end of the day, the smarter player in that scenario was the person who saw the problem coming and got liquid. And so I think we have an opportunity to do that. There's tremors in the credit market. It's a good time to think about getting liquid. Brien brought up something. He talked about things being real and essential. I think that's huge. Discretionary spending is the thing that's going to go away. So if you're in a real estate product that depends on discretionary income, that's not as safe as being in something that is fundamental, like healthcare or residential real estate. And then just understanding that asset values are very fickle. I love equity, but equity's false, right? You can look at your balance sheet and go, hey, assets minus liabilities is net worth. I'm doing great. But when everybody goes to sell, all that equity disappears. So it's really important to have it in things that aren't bubbled up. And again, I'll go back to cash. Cash is not a bad thing to have in an environment like this. Precious metals is not a bad thing to have. Those aren't investments. Those are alternative ways to hold your wealth until it's time to deploy it. But when you do deploy it, purchase things that provide cash flow. Cash flow is real wealth. Cash flow is people paying in real time for goods and services they need right now. And if you have that kind of cash flow coming in, you've got a real asset. Everything else is air. And when credit markets collapse, you just have to be prepared for the air to come out. I'm not saying don't own those things. Just be aware of the vulnerabilities.
Yeah, the idea of being prepared. I know you've talked about this before, Russell, the idea of having cash, putting it into an asset and getting cash flow, where you have the inflation hedge there, you have something that pays you to hold it. Metals obviously provides liquidity. I want to take some questions here in a minute. We're getting some questions come in, but I want to go around one more time and just really touch on this. A lot of people want to know, as far as a prediction, obviously nobody has a crystal ball, but I think of George Gammon with his end the Fed hat, right? So the idea, if we end the Fed, if that actually happened, is that even possible to do that? And would that take a revolution to do that? Or what would that actually mean? Maybe I'll get shadow banned for asking this now. And then secondly, what does a great reset look like? What do you foresee it look like? Russ mentioned, potential trouble in the credit markets. What is that kind of, what's the play out of that? Jay, do you have any thoughts on kind of, maybe how you see that playing out, or what sort of timelines? And if you have your own crystal ball from what you could see, how would you kind of see that playing out?
Sure. Yeah. I mean, to your first question, is it possible to end the Fed? I mean, yes, right? Probably. And what's life look like after that? I'm not sure, but whoever's at the top, I guarantee you, they have a lot more bullets in the chamber to fight and keep that spot. And I wouldn't count on that going away anytime soon. But like, I base my whole show around the fact that I have no idea what's around the corner. And so therefore, like in the event of some kind of great reset, you know, what do things look like on the other side? I think the only honest answer that I can prepare for is that I have no idea, but I can prepare for that, right? That's easier to prepare for. It's easier to prepare for uncertainty as long as you acknowledge that's the most likely thing to occur, which is probably it. And to me, that looks like personal sovereignty and optionality, right? And so, you know, I already mentioned this, but it's like, how do you retain that sovereignty in an anything goes scenario? There are unlimited variables that will come into play. I think the next, you know, the remainder of the 2020s are just going to be how the 2020s have been so far, just continued, unprecedented, unpredictable events. And I think the biggest ones are still to come. That's what I believe. So, you know, what's it look like on the other side? I'm not sure, but I think things are going to get a lot crazier in the next few years before we get to some semblance of common normalcy. And so I like to take myself out of the equation, right? Russell said it. How do you fix the financial system? You fix your financial system. You can do that. That's within your power to do. And that's something you can start today with whatever resources you have available to you. Everybody has the potential to achieve some kind of savings, right? Typically, savings is just the gulf between your ego and your income, right? Typically, there's some space there. You can depress your ego a little bit. You might find some space between that and your income, and start accumulating off-grid assets. I don't give advice, but that's what I'm doing, right? That's what I'm doing. And I like that I have that sovereign wealth in the form of metal, in the form of real estate, in the form of cash. It's also very, very empowering when you organize your life that way. When I know, for example, I have a lot of physical metal, right? I'm from Vancouver, Canada. It's not weird to do that up here. It's never been weird. It's a gold town. But as a consequence, recently, I found a seller in distress selling a condo in a building in a location in my town up in Squamish that I really wanted to buy. And I broke one of my rules. I sold some of my gold in order to purchase this condo. So what I did was write myself a promissory note. The gold had to be paid back by January 1st with interest. Now I'm executing on that plan, right? And it's up to me whether or not I default on my own loan, but I'm choosing not to. But that's very empowering to know that you can be your own bank. And it's just one example, but what it does is give me the confidence to know, right? When I've got the treasury full, it just gives me the confidence to know I can weather a storm and I can be in control when the world is out of control. When you feel confident and in control, you just think better. You think proactively instead of reactively, right? If you're against the ropes, over levered, you know, at the victim of the wind or whatever you want to say, like you're reactive, you're thinking short term, you're thinking from a survival mindset. But if you start accumulating whatever that safe haven, whatever that war chest looks like for you, maybe it's just cash, maybe it's owning your principal residence, maybe it's buying gold, doesn't matter. But when you start accumulating that war chest, it gives you the confidence to be faced with a crisis and stay calm and be patient, right? And wait. Often doing nothing's the best trade, right? Instead of reacting to circumstances immediately because you feel like you have to, right? Yeah.
Right. No, that's great. It's interesting. My background, I was an investment advisor for a few years, just advising people based on traditional and alternative investments. And I realized it was kind of the dark side where there's all these people educating you and they have an incentive to educate you because they want to sell you something, kind of what you were saying earlier, Jay. But the idea of like a panel like this is awesome because what it allows us to do is for us to be educated on what is really important, becoming personally sovereign, having, things outside of the financial system and really preparing. I love it. Thank you.
Can I just add one last thing onto that, Bronson? Because
Sure.
I imagine if you're listening to this and you're like, oh, it must be nice that you have a safe full of gold. Let me just clarify, like my first purchase was 1 ounce of silver, right? Like it's incremental growth that compounds over time if you're consistent with the game plan, right? Back to like, what kind of investor are you? How much time do you have to invest in being an investor? The question is over time, how much time do you have to invest? And building that war chest, like it's a lifelong process, right? It didn't happen like this. It won't ever happen like that, right? And just so, compound interest, right? Like that's it. Just think about this as a life plan. Your financial plan should be a lifelong time horizon.
Love it. Thanks, Jay. Brien, what do you see? What does the reset look like? What do you see kind of happening next? How does it play out?
Well, getting back to what I was saying before, this is a multi-decadal trend we're on, and we're in the end game. The water is going around the drain a lot more quickly right now. Things are happening more quickly, but we tend to look at it as in a very dollar-centric way. Basically, every developed economy out there has been doing the same thing over these decades. They've been building up debt to varying levels, but to the point where it's unmanageable. So it's not just the dollar, it's got to be something more holistic. I think all of these fiat currencies are going to lose credibility, because whether it's this cycle or the next cycle or the next, the central banks are going to come in with ever greater amounts of liquidity. They have to not only do what they did before, they have to do a multiple of what they did before. So very quickly, relative to what we've seen in the past, people are going to look at currencies as just a waiting game. When's the next crisis when the money supply is going to be trebled just to get us out of that one? So currency is going to lose credibility, and the only way to get them back is to attach them to something that forces restraint on the issuing bodies. And people are talking about, well, SDRs, baskets of commodities and everything else, because they don't want to sound like crazy gold bugs. But the fact of the matter is, the one element out there in the world that could back currencies, that could have its value raised to such a degree relative to the currencies without interrupting any industry at all, is gold. You could have gold back 20% of M2, which would imply a $10,000 gold price right now. And you would not upset any industry at all. The jewelers would melt down their inventory and recast it in 8-carat gold or something like that, or gold plated, or they would sell it at a higher price. But literally, that's the only industry that would be affected. There's no other element on the face of the planet that you could multiply its price 4 or 5 times over by edict without upsetting any other industry. And so it is, imagine that, it is the perfect form of money, coincidentally, and has coincidentally been that for 4,000 or 5,000 years of human history. So I think that's going to happen at some point. There's going to be a new Bretton Woods. Currencies will be reattached in some manner to gold. Nixon will be proven not a liar. It was temporary and just a little delayed. And I think that's essentially what the Great Reset will have to be in some form of fashion. And it's entirely workable. You don't have to, people say you can't expand the money supply, you can't adjust for productivity or growth, et cetera, et cetera. You just have to change the exchange rate. Nixon didn't have to sever the tie. He could have just devalued the dollar, but that would have been an admission of failure. It would have been a spotlight shown on the fact that we're devaluing. Instead, he opted for the shadow devaluing in the background over time, where people in power can blame the guy before them or the guy after them. It forces accountability, but it does not eliminate any of the ability to adjust the economy, adjust the exchange rates, or face new and different circumstances.
Yeah, it reminds me actually kind of what you were sharing about gold. Bank of International Settlements, I think it was an interview with Andy Schechtman with Jay that was sent to me recently about central banks hoarding gold. And secondly, the Bank of International Settlements moved gold from a tier 3 asset or a tier 2 asset to a tier 1 asset. And that kind of happened right before COVID. And so it's kind of set up in a way that a lot of countries own this and for some sort of reset. Russell, talk to us for a minute about what you see, and then we're going to get to some questions, because I know there's a lot of good questions, a lot of great conversation. But what are you seeing as far as the progression of where we're headed from here?
Well, there's a couple things. One is I just wanted to do this real quick. Ron Paul wrote a book called The Case for Gold quite some time ago. And then Jim Rickards came out with another book, The New Case for Gold, which was explaining exactly what Brien was just talking about, why gold is unique in terms of its ability to serve as money. So if you don't have your head around that, you may want to, because one thing to keep into consideration is that for the last several thousand years of human history, gold has always been money. It was only since 1950 or since 1971, August 15th, 1971, 51 years ago, that Nixon took the world off the gold standard. So we are living in an anomaly. This financial system, the way it works today, even though it's been around most of our lives, is really an anomaly in the way human money has worked for a long, long time. And, you can say that tech has changed that, but I don't think so, because you've got this thing called counterparty risk and or a dependency upon a critical infrastructure, right? If the internet goes down, if electricity goes down, my Bitcoin's not worth anything. It's only good if the grid works. Now, I'm not saying don't have it. I'm just saying understand that you have that vulnerability. Whereas if I got an ounce of gold in my safe, like there's nothing, it's not dependent on anything. And so I'm not trying to sell you on gold. I'm just saying that there's a reason why the ultimate currency insiders, the central banks, the people that print the money, are hoarding gold right now. They've just stocked up. If you just go look up the news, just look at what's been going on. Brian's probably more up on it than I am. I'm sure Jay is. That these guys have been aggregating gold. They're getting ready for something. Now, at the same time, you've got Russia, who divested itself of its treasuries and beefed up its gold, and then demanded that its oil be sold in rubles, and then made the rubles convertible for gold. And so you had this situation where they had kind of a de facto gold standard. And so you've got China and Russia that have been working together for a dozen years now. I first actually did a presentation on this at Brian's conference in 2013. And I did a report on it, the Real Asset Investing Report. If you've seen it, you can get it at Real Asset at realestateguysradio.com. But I documented how China and Russia have been working together to de-dollarize. Now, I'm not saying that China wants to be the world's reserve currency. I don't think anybody wants to do that. They just don't want the dollar to be the world's reserve currency, because it gives the U.S. the power to pick winners and losers in international trade. And I think the world has had it. So with that said, with the pressure on the dollar, even though it's got temporary strength, that's because other currencies are failing faster and people are piling into the dollar. The other hidden strength, I think, and I'm certainly not a currency expert, is that you've got these bonds going bad and people are having to raise cash, and that creates a bid on the dollar. So you've got temporary dollar strength, which is great in terms of pushing gold and silver prices down. If you understand what's happening, you're making that trade, right? I'm gonna sell my dollars and I'm gonna buy gold and silver in an environment like this because the getting is good. But I think that the Fed realizes that the dollar in its current forms, its days are numbered. It won't admit it. Nobody will admit it. But I think that's why you hear the talk about the central bank digital currency. George Gammon's done a great job explaining all of the dangers to your personal freedom and privacy if that happens, but it's something you need to pay attention to. So I'd be watching that. As far as your question is, can they end the Fed? Yes, and absolutely. And they should, in my opinion. I'm not a fan. I've never been a fan. I don't think we need one. We had a central bank kind of at the beginning. We went for a long time without one, did really well. Then we got another one. Andrew Jackson shut that one down. We did real well without it. And all of a sudden, the third time around in 1913, the bankers got a control of it. And if you're not familiar with that whole story, read The Creature from Jekyll Island by our mutual friend G. Edward Griffin, and it'll kind of enlighten you. So yeah, we can get along without the Fed. And so can you. So, I would say the one thing that everybody can do is reduce your dependence upon the critical infrastructure, right? If you have to have a healthy internet to survive, then you could be in trouble. I've started a local investor mentoring club right where I live, because I found out in COVID, when I can't travel, and if I can't count on the internet, when Zoom was overloaded and you couldn't get decent bandwidth, I could not get together with my tribe. That was a problem. I mean, I love what we're doing right now and it's fantastic, but I don't want to be dependent on this to get together with people. So I'm building a local tribe. I would encourage people to do that. The second thing I think is learn how to barter. We did a little exercise like that on our summit, because there may be a time where you don't know what currency is good. You just got to trade value for value and make sure that you got a bunch of stuff on hand that you think would be barterable, and that you have a tribe of people that are similarly prepared that you can trade with. I mean, that may seem pretty Neanderthal, but better to be prepared and not need a tribe or know how to barter than to, need to know how to barter and need a tribe and not have them. So I think, it's fun, but I would learn to do that. And then just, again, when I talk about reducing your reliance on the grid, if you got cash outside the banking system, then if the banking system goes bad, you've still got cash. Now, I'm not saying don't keep all your cash, but keep some. And precious metals, I mean, if you want to have precious metals with somebody, a depository or whatever, that's fine. But I'm going to want to have a few where I can get my hands on it without having to ask anybody any permission. I think that's important. People say, oh, you should have some offshore. Well, that's great if you can travel. But if they shut the border like they did in Belize, for 8 months, you can't get to your precious metals. So COVID really changed. The whole lockdown thing really changed when I saw how draconian the ability to travel and communicate could be. So I think those are some of the things you really want to focus on. I don't know what the Great Reset's going to look like. It could be two-tiered. Rickards has been talking about changing the way they do it internationally with SDRs, replacing the dollar as the reserve currency at the macro level. If you're not familiar with that, read his book, Currency Wars, and the rest in that series. He does a good job explaining that. And then the dollar would just become a local currency. But one thing I would be prepared for, probably more than anything, is if in fact Russia and China and the rest of the world are successful in removing the dollar, and for whatever reason the Fed and the US government is unsuccessful at reestablishing the dollar, then all the people globally who are holding the dollar in their reserves, just like an S&P 500 company getting delisted, and all those fund managers, all of a sudden they're selling those dollars. So I know that, a lot of times as investors, we don't think about currency trading because we don't think that way, but currency is just like anything else you could buy or sell. And so when people begin to divest themselves of dollars, if they're not needed in international trade any longer, then dollars are only going to be usable in America. Does that make sense? And so if you can imagine all these dollars that are all over the entire world, all of a sudden not being worth really much of anything around the entire world, they're all going to come home to America where they can bid on stuff. And what happens when you bring trillions of dollars back to an economy that doesn't grow by an equal amount? What's the net result for the prices of goods and services? Hyperinflation. So I'm not saying that's going to happen, but I'm saying it's something you should be paying attention to. And again, I would say the most important thing for American investors is to learn to think outside the dollar. Everybody else around the world knows how to think in their home currency and the dollar because the dollar is a reserve currency, but Americans don't know how to do that. Americans only think in terms of dollars. And if the dollar goes bad, you don't have a plan B, no gold, no concept of other currencies. You don't really understand what would happen when you start to see the warning signs that the dollar is failing. When you start to seeing 8, 9, 10% inflation, that's a hint the dollar is failing. And you better start buying things that are real and not just trying to stack up more dollars. What people will do when they don't know what's happening is they will sell real stuff to get more dollars because they need more dollars to buy the stuff they need. And then that's where all of a sudden, you're running down to the shop with a wheelbarrow full of paper, just trying to divest yourself as quick as possible. I'm not saying that's going to happen, but it's happened in the past and the tee up is here. So I think people just need to be aware of it.
Yeah, thanks, Russ. That's great. We've got some time for questions. I'm going to just kind of going through some of the questions here. I'm going to kind of bring them out here. When Money Dies is a great book to read about hyperinflation in Germany. If you haven't read that book, it's a very interesting book. Also, Daniel DiMartino Booth was in Belize. I got to sit down and have dinner next to her. And I asked her, I said, what about central bank digital currency? She used to work at the Fed in Dallas. And she said, Jay Powell knows that if central bank digital currency comes out, it will destroy the US reserve currency status. I'd love to hear from Jay and from Brien as well. Just what do you see as being, if the US will switch to something else? And maybe I know you guys are heavily in the metal space, but do you see, central bank digital currency or some of this basket of currencies or the SDRs or something else? Like what do you see coming next, Jay, for currencies as far as reserve currencies?
Well, I think they're definitely coming, in some way, shape, or form. Payments Canada is open about this on their website. They're actively working on a central bank issued digital currency. They have no plans to roll it out, but if and when circumstances required it, they want to be in a position to do so. And so, yeah, I expect some version of this. And I think it's going to be people on this call, on this panel. We may have reservations. Look, I do, but it's going to be an incredibly easy sell to the general public, right? It's like we're, and people have been conditioned, over the last 5-10 years to navigate the cryptocurrency and digital currency space. So it's not so much of a shock. And if and when, we get to a place where a transition like that is being forced, it's as simple as incentivizing the population with a small amount of money in that account to go ahead and make that shift, and people will do it. People will do it for sure. The two biggest concerns people tend to have about CBDCs are surveillance and control, right? The surveillance thing, I get, honestly, I kind of think that ship has sailed, to be honest with you. I operate my life off my mobile phone, my laptop. Everything I type is being recorded, right? We know this now, right? If I'm speaking within audio reach of my phone or my laptop, I'm being listened to, just so my tech can hear, just in case I say, hey Siri, it's got to hear everything to hear those words, and most apps that we have full access to the files on your phone, keyboard access to see what you're typing. This is blah, blah, blah. We know all this stuff, right? So like a little bit more surveillance on the back of CBDCs, it's not good, but it's the autonomy, losing the autonomy over your cash is the bigger risk that I see, right? Where you can actually, programmable money allows you to incentivize people to spend there and not spend there, or just to spend because your cash discounts at 10% every month or whatever if it's not spent, right? And these things I think are super realistic to expect. There was a question in the chat about, I don't have it in front of me, but it was like, how do you leverage your precious metals in a CBDC environment, right? Because there would be absolute surveillance on how every dollar is transacted. And, Brien and Russell touched on the importance of understanding how to barter. It's not front of my radar, but I think it's super important. But more important, it's like, I don't know the answer to that question. How do I leverage my precious metals in a CBDC environment? I don't know, but I do know that I'm going to want the optionality to do so, right? I'm going to want to have that ace up my sleeve. And so I don't need to know how I would leverage my precious metals. I can look at history and say, well, what has survived the rise and fall of hundreds of empires and thousands of market cycles? It's precious metals, right? And land, like it's hard assets. And so that's enough for me to make that bet with confidence that I don't know exactly how I'm going to have to navigate that world, but I want as much optionality as possible.
Awesome. Thanks, Jay. Brien.
Yeah. I agree with what Jay says. If you look at central bank digital currencies, I can sum it up in a REM song. The end of the world as we know it. It really is. There's nothing more diabolical out there on the horizon. I've talked with Danielle about this a few times and Jay Powell's view toward it, and she is firm in her belief that Jay Powell is essentially staying in the job to prevent this from happening. So I don't know. She knows much better than me. I hope she's right, but he's not going to be in that seat forever. And the trend is for those in power to always seek more power, as we've seen. Very rarely in human history do governments give up power voluntarily. And so I think it's going to happen. The issue about how would you be able to convert your gold into the central bank digital currency, I don't think you're going to have to worry about that, because I think that that's going to be outlawed. The only reason to have a central bank digital currency is to make it the only currency, the only legal tender. And so perhaps owning gold in that environment would be outlawed, but definitely using it in exchange would be outlawed, which means you need to have it so you can find like-minded people to use it with. And that's going to be about your only way to conduct transactions in any kind of privacy or at your leisure, rather than being forced to conduct those transactions. So it's a scary thought. It's where the world is headed, I think. I do have some hope that there's enough of a maverick mindset and independent mindset in the US that we would be the last to fall in that trend. But, I may have more faith than is warranted.
Awesome. Well, guys, this has been an awesome panel. We're kind of getting short on time, so I want to make sure that people have a way to reach out and connect with you. I have tremendous respect for each of you, for your platforms. You're committed to really getting this message out to help prepare people for what's to come. Wanted to share about our investment club. We're doing multifamily deals. We've got about 250 million in multifamily assets. We work with retail investors. We also have an ATM machine fund and are working at some stuff in the energy space. So you can join our investment club there. Brien, can you talk about the New Orleans Investment Conference? I'm going to be there. Russ is going to be there. It's going to be conversations like this for 4 days. It's going to be awesome. Can you talk a little bit about how people can, actually, I'll put a link in there, but just talk a little bit about the event here.
Yeah, thanks, Bronson. It's happening next week, Wednesday through Saturday. So very short time away, but you can still, if you can hop on a plane, you can make it, because the hotel room block is open through Friday. We just got the approval to do that. I'm going to hold the discounted registrations fee open through at least then. And tremendous speakers. Russ will be there. Robert Helms will be there. We're going to have Jim Grant, Danielle DiMartino Booth, Jim Rickards, George Gammon, Jim Urio, Rick Rule, Brent Johnson, Dominic Frisbee, Tavi Costa, John Najarian, Peter Bookvar, Lawrence Lepard, Dave Collum, Jim Stack, Adam Taggart, on and on and on. Dozens of really wonderful speakers, and it's an incredible event. Just ask anybody who's been, and hope to see everyone there. They can find information all about it on the link that you provided.
Awesome. Thanks so much. Appreciate you being here, Brien. Looking forward to the event. Jay, why don't you talk about how people can reach out to you? I'll put a link to your event coming up here as well in the chat as well. Oh, can we hear you, Jay? Oh, looks like you're on mute.
I was on mute.
There
I'm
you
back
go.
now. All
All
right.
right, welcome back.
Thanks. I was just going to say, I went to the New Orleans Investment Conference last year for the first time. I used to have a conflicting event and I could never make it down, but I was able to make it last year. And I've never met anybody who's gone to the New Orleans Investment Conference who hasn't had phenomenally positive feedback about the show, Brien. I just wanted to share that with you. Your
Thank you,
reputation
Jay.
is phenomenal.
Appreciate that.
And what I would say, like, go to the events. And then if you want to talk to Danielle DiMartino Booth, if you want to talk to Rick Rule, approach them. You'll get a 20-minute conversation. These events, that's what they're for. And, I was shocked when I started going to a lot of conferences, how accessible all the keynotes were when they got off stage. It's like, oh, you're here to meet people just like me. This is amazing, right? And you can build your network out that way. It's very valuable, and go. On that note, come to my conference in January in Vancouver, British Columbia. We're January 29th and 30th, and it's strictly natural resource focused. And so we'll have about 300 junior mining companies there, and a handful of stages. And we're doing the same thing that I'm doing on my podcast. It's like trying to find value, trying to find places, good homes for capital. Rockstar lineup of guests. It's super fun. We put that business on pause during the pandemic, obviously, and I was really sort of on the fence about resurrecting it, because the media business is way more fun, to be honest, and simpler, right? Less risk, all these right things. But we just, with the state of the world, it's you can't not do it. You can't not do it right now. There's so much to talk about. Like, if you don't love macro today, then just forget it, right? There's enough going on right now to keep anybody interested. So all of our information is at cambridgehouse.com. That's, you can find out about the event. I publish 3 pieces of content per week on my YouTube channel and my podcast, and I write a weekly newsletter. That's my favorite thing that I do. And I think it's just jmartin.club is the landing page to sign up for the newsletter, or the Jay Martin Show on YouTube and Spotify.
And I've got a link to your conference here in the chat too. So thanks so much for being here, Jay. Appreciate you. Russ, how can people get in touch or follow or connect? Looks like you're muted.
Yep.
There.
No, I'm going to go with the trend because everybody's promoting their conference. First of all, let me totally endorse Brien, because, Robert's a host of the Real Estate Guys radio show. We have never missed a New Orleans investment conference since we first started attending. It's been fantastic. I didn't know anything about gold until I started going there, and now I feel pretty confident having conversations about it. In fact, Dana Samuelson, a mutual friend of all of ours, I'm sure, is a precious metals dealer, and I met him there, and he and I put together a whole 14-part webinar series on precious metals. So if some of this precious metals talk has intrigued you, but is a little over your head, you can check that out by sending an email to silverseries@realestateguysradio.com. But we have our annual investor summit. So if the New Orleans Investment Conference is a little too far or too close for you, We just opened up registration and we spent a week in Belize at our resort development property down there. Both Brien and Bronson have been, and we convene a bunch of people. We talk energy, we talk metals, we obviously talk real estate, we talk macro, we talk Main Street, a lot of networking. And here's the reason to go. We talked earlier about tribe and education. You learn by sitting in and being focused and listening to smart people. That's one level of learning. This thing's been great. I'm sure that many of you watching go, oh, I wish I could stop and ask more questions. I wish I could be in the room and have a conversation. Well, that's what New Orleans is about. That's what the summit's about. I'm sure that's what Cambridge is about. You get a chance to get together with people, and you go to the session, you hear what people have to say, then you get together and you talk about it. And it reinforces your understanding, and you get perspectives that you wouldn't otherwise get. And here's the other thing you get a tribe. You get people that are like-minded. They come out of the woodwork. It's a big investment to go anywhere. And so the right people show up. They're highly motivated. They're smart. They're successful. You become friends. You will get more done in 4 or 5 days at the New Orleans Conference or at Cambridge Conference or at our summit in terms of deepening your knowledge and building your network than you probably would if you watched, I don't know what, 100 webinars. The webinars are great, but you really got to get in the real world and connect with people. So I would encourage you to attend all of them if you can. They shouldn't cost you money. They're investments in your education and your network. But we've got ours, and I highly endorse Brian's, and I'm sure Jay's is excellent. I can't say because I haven't been. It's been on my list since forever. But I encourage you to check out one or more of them.
Well, that's a segue for me to actually return the favor to Jay, because I'm in this industry and in the mining share market. And if you are invested in this sector, you absolutely do have to attend Jay's event. It is the one-stop shop event for mining investors, for junior mining investors, especially. If there's a company out there that's viable in the junior mining space and they're not at Jay's event, they better have a damn good reason why. And you can literally go there, and the exhibit hall is packed with opportunities, and you just have to go in and ferret them out.
Awesome. Well, guys, I just put in the chat. First of all, thank you all for coming. Thank you for the attendees for being here. I always feel like the best education, or the best investment that you make rather, is in your own education. So by you being here, you're doing it. The Investor Summit is that way. The New Orleans Investment Conference is that way. Jay's event in Vancouver is the same way as well. Next month, our next event is November 15th. We've got Dave Lindahl in the multifamily space, as well as Ferris Musa, two just titans of the multifamily investing space, talking about the new multifamily investing environment. I got one other big name I'm working on, so I'll keep you posted on that. So keep an eye on your email. This will be sent out as a replay to you via email. It'll also be on my YouTube channel at Bronson Hill. So thanks everybody for being here. Really appreciate all our panelists for being here, taking time out. This was awesome. This was a great conversation. Look forward to doing it again soon. So thanks so much to our panelists. Thanks to everybody for being here, and everybody have a wonderful night.
Thanks, Bronson. Thanks, guys.
Everybody.
Thanks, guys.
Thank you.